But most people are going to get what they deserve. Most people are not being defrauded. I mean, they're just delusional. I mean, they're believing, a pipe dream. I mean, it's the easiest thing. I mean, get rich quick schemes have been around for a long time. I mean, the crypto community didn't invent that.
Fiat currency is a pyramid scheme. So it's those with access to the newly printed money first get rich at the expense of those who get it latest and last. So if you just look at the operating mechanics of fiat currency, it's a really bad deal for everyone unless you have access to that new liquidity first.
Welcome to episode 124 of the Mikhaila Peterson podcast. In this opposing views style episode, I talked about Bitcoin and gold and economics with Peter Shiff and Robert Breedlove. Bitcoin, you have people obsessed with it, with all their life savings in it, like one of my guests, and you have people who think the entire thing is a scam. Either way, it's a hot topic. You could go online right now and put your life savings into Bitcoin or Ethereum, the platform used for purchasing NFTs, or a coin that's literally a meme. Your life could change overnight, provided Elon Musk tweets the right thing. My first guest, Peter Shiff, isn't the biggest fan of cryptos, to say the least. Shiff is an American economist, stockbroker, and author famous for predicting economic shifts or events like the mortgage meltdown. He's a regular guest on national news and host of the Peter Schiff Show Podcast. For the second half, I had Robert Breedlove on. Robert Breedlove is a crypto enthusiast, strongly believes in cryptos, Bitcoin being his favorite. He's also an entrepreneur, philosopher, and the host of the What is Money show, where he has deep discussions with prominent thinkers from around the world. If you enjoy this episode, please consider subscribing and let me know what you think about Bitcoin versus gold in the comments below. Peter Shiff, welcome to my podcast.
Well, thanks, Mikhaila, for inviting me on your podcast.
This is going to be good. Before we get started, can you give a brief background about who you are and what it is you do for anyone not familiar with your work?
Well, for a living, I'm mainly an asset manager. So I have a company, Euro-Pacific Asset Management. That is my main business. So I have clients that entrust their portfolios with me, and I manage the money. What's, I guess, unique about the way my approach versus, let's say, the standard asset manager is I have a very specific worldview that really runs counter to the mainstream narrative. For years, I have been pointing out some serious structural problems that underlie the U.S. economy. This understanding led me to forecast the 2008 financial crisis. I did that very vocally on cable news in a book that I wrote, Crash Proof, How to Profit from the Coming Economic Collapse. It led me to position myself and some clients short the subprime market. Prior to the collapse in 2008, I understood a lot of the problems that the Fed was creating with its monetary policy that not only really facilitated the mistakes that were being made on the fiscal side, but created even bigger mistakes structurally for the U.S. economy. And I have been forecasting that ultimately we would go through a currency crisis, which I think we are really on the cusp of now, because we're finally starting to see the manifestations of the inflation that the Fed has unleashed over the last decade really starting to show up in a very big way. Initially, of course, the mainstream that doesn't understand what's happening is dismissing it. But just the way they dismiss the problems leading up to the financial crisis, they're dismissing the even greater problems now. So I incorporate this view into my strategy for managing money. I also I used to have a gold company, Shift Gold, which I now work with as, just I help promote it. And I have a lot of involvement in the type of products that are sold there and their approach to selling, because I really sold off the company when I moved to Puerto Rico a few years ago. And so I just operate my businesses now from here. But I also have my own podcast, which actually had its roots in my radio show. I did a daily radio show after my unsuccessful Senate campaign back in 2010. I started to do the radio show. Ultimately, didn't have enough time to commit to that 2-hour show 5 days a week. Eventually turned it into the Peter Schiff Show Podcast. So I've cultivated an audience there. I talk a lot about economics, finance, politics, put a free market, libertarian, Austrian economics spin on everything. And generally, I think what I'm doing on my podcast is giving people a more accurate view of what's going on than what they're getting from conventional media sources, which again still don't really appreciate the underlying problems, what the cause is, or what they ultimately portend.
Okay, so what is going on? Are we in a state of inflation, like rapid inflation? Is that what we're seeing, and people just aren't aware?
Well, the Fed has been inflating for decades, but particularly ever since Alan Greenspan showed up. He really wrote the playbook that his predecessors have been following. But, we just kind of moved from bubble to bubble, and we're afraid of allowing market forces to restructure the economy in the way that it needs to be restructured, because, the process would involve some pain, because asset prices would fall, loans would default, investors would lose money, workers would lose jobs. But a lot of this would be temporary, because the workers who would lose jobs, they would lose the wrong jobs so they can get the right jobs. Because right now, government, monetary policy is keeping resources misallocated, which includes labor. And so you're seeing that now, because there's a shortage of pretty much everything. And that's because we're not focusing our resources, including labor, on producing the things that we actually consume. Because of the Fed, so much of the investment is going into things that we don't really need. It's a bunch of nonsense. A lot of the companies that are getting financing are not actually producing goods and services that we need now. They're just kind of harebrained schemes about what might happen in the future. But since money is so cheap, a lot of these malinvestments are being made, and that would include everything that's going on with cryptocurrencies. We've got over 12,000 cryptocurrencies. There's new cryptocurrencies being created every day. There's a lot of real resources, energy, manpower being used to basically conjure these things into existence. But in the meantime, all of those resources and energy could have been used making actual things. But we're not doing that. We're not, planting new farm acreage. We're not, opening up new mines and producing the resources that the world actually needs. We're just creating these cryptocurrencies that nobody needs. But a lot of people want them because they think if they just buy them, they're going to get rich and they'll be able to buy all the products that nobody's making. And so meanwhile, the stuff that we're not making is scarcer and scarcer, and we have more and more money to buy it. And so the prices are just going to be going ballistic. And, people are, again, we're seeing just a cusp of that right now. And the initial reaction is this, well, just to dismiss it. It's transitory, it's temporary. But oftentimes when you're on the cusp of a major change, very few people are going to recognize that that's actually what's happening. So they're going to try to rationalize it away. For years and years, the Federal Reserve was telling us the problem was there wasn't enough inflation, that their policy goal was actually to create inflation because we were suffering from a lack of inflation, which was all nonsense, the whole time. It was the way that they justified their excessively loose monetary policy, which they were pursuing to keep asset bubbles inflated. And so the US government could keep spending money it didn't have without having to raise taxes. So the Fed was able to supply the money by monetizing the debt. But now those chickens are coming home to roost, again, in a way that very few people really understand.
Okay. So how much of the inflation that's occurring now is because of crypto, or is it because of other things?
Well, the cryptocurrency market is one of the manifestations of that inflation.
Okay.
It's one of the bubbles that has been inflated by the Fed. Now, certainly in some communities, like where I live in Puerto Rico, I would say that a lot of the crypto money is helping to fuel real estate prices here, as a lot of crypto people are kind of moving here. But what one person is able to spend is simply what somebody else can't, because all the Bitcoins or all the cryptocurrencies are just a transfer, right? Because the only way you can buy something with your crypto is if you sell your crypto, but that can only happen if somebody else buys it. So somebody who's buying a house in my neighborhood and selling their cryptocurrency, it's because some other fool bought cryptocurrency and gave them that purchasing power. But now that other person who bought cryptocurrency can't buy something else. Although what is happening now is, because of all this cheap money that's sloshing around, there are people who are actually holding their cryptocurrency and spending them too, because they're able to borrow money against that cryptocurrency. So to the extent that the crypto community could create money through debt, which is a byproduct of what the Fed is doing, then it is acting to help fuel the inflation, because now two people are spending the same crypto, because it's just people are borrowing against it. But more than it's creating inflation, I think the way the crypto industry is magnifying the inflation problem, because inflation is about creating too much money. And so when you print more money and you have a certain, a given supply of goods and services, you have more money chasing those goods and services. I think the way the cryptocurrency industry is making that worse is by diverting a lot of our scarce resources away from a productive use to the creation of cryptocurrencies. And so in that respect, we're creating all this money to buy products, but then instead of creating the products, we're creating cryptocurrencies. And so we have too many cryptocurrencies, but we don't have enough stuff, real things that people need and people want. Again, nobody wants Bitcoin or any other cryptocurrency. They simply want what they think they can buy in the future when they sell their cryptocurrency. But the problem is, if we're not making those things, if everybody is just making cryptocurrencies instead of actual things, well, then there's nothing to buy. So all you have with cryptocurrency is a delusion. You have a bunch of, wealth on paper, but you can't actually convert it to real things, because if enough people tried to get out, there'd be nothing there, because the price would implode.
What do you think about the places that are using types of cryptocurrency to buy products? Like, I know when I was in Dubai, you could use cryptocurrency to buy products on Amazon. If it was implemented that way, do you think it's feasible?
No, because there's only a few people that actually do that. I mean, the real use case for any cryptocurrency is as a token for gambling, right? People buy a cryptocurrency because they think the price is going to go up. I mean, that's really what's driving the whole thing. And, because they're buying it because they think the price is going to go up, they don't want to spend it. They don't want to use it because otherwise they wouldn't have bought it, unless the only thing you have is cryptocurrency. Most people, they have cryptocurrency, and then they have fiat currency. They have a job. They get paid in wages in whatever currency they're earning. They use that to buy things. And if there's something left over, they may buy more crypto because they think the price is going to keep going up. But yeah, you could always have a few people that potentially could use it as a medium of exchange. But if enough people tried to do that, I don't think it would work, because then the price would collapse, and the volatility would also make it impossible to really use it as a unit of account or as a medium of exchange. So it just wouldn't work. But yes, if enough people are just holding on to it and never selling it, a few people can transact in it.
Okay. What about, I guess the one use I saw for it for traveling was because I've been helping my dad run his company, and we're doing wire transfers all the time, and transferring large amounts of money takes time, and there are fees associated with it. And when I've been traveling using crypto, you can just transfer internationally, and there aren't fees associated. There's fees associated with it, but not fees like transferring money in a wire.
Obviously,
so in that way.
Well, yeah, the cost of a wire, bank wire can be, $50.
And time.
So, yeah, well, a lot of the banks now require that you actually show up in the bank. I mean, what the reason that a lot of these bank transfers take time, and I know that because I'm also in banking, is because of the government regulations that slow it down and increase the cost. So the actual technological costs of doing a bank wire for a payment should be very, very cheap, and it should be very quick. What slows it down and increases the cost is government regulation. And to the extent that it's cheaper to transfer crypto is because the crypto is not subject to those regulations. But that is all going to change. I mean, a lot more regulation is coming, and it is going to get a lot more expensive and a lot slower to transfer crypto once government starts applying all of the KYC and AML requirements to those transactions. I mean, that was kind of the advantage it had, is that it didn't have all the regulation. But then, of course, the regulation comes. It's, you just have a moment of time where you're kind of under the radar. But that's why, in some respects, a Bitcoin is a victim of its own success, because when it was, under the radar and, there wasn't a lot of attention by the regulators, but now all of a sudden it's all over the place. So the regulations are going to be there. That is going to increase the cost dramatically of working with it. But the real problem, though, with Bitcoin is not the speed or the cost of you giving me your Bitcoin, or me giving my Bitcoin to somebody else. It's what happens to that Bitcoin, while I own it, or before I transfer it. It's the risk that at any minute the market value of that Bitcoin can implode. So that's what really increases the cost, is the risk to the owner of what happens to their Bitcoin. Because it's like the game, musical chairs. I mean, what if the music stops and you still have Bitcoin, and then the just price implodes? I mean, nobody worries about it when the price is going up, and everybody's excited because they think it's going to keep going up forever. And people got laser beams on their eyes because it's going to go to 100,000 any day, and then it's going to go to 1 million. But what happens when the bottom drops out and Bitcoin is dropping rather consistently? It's too risky to have any real value stored there, because it could evaporate. And so ultimately that's going to be the reason that it's not going to work as a method of transferring money, is going to be because of the tremendous amount of risk to the parties that are involved of how much value Bitcoin can lose while you're waiting to transfer it, or once you receive it, before you get a chance to get rid of it. There can be a big drop in value, and that loss, dwarfs the cost of transferring, a fiat currency around.
Okay, that seems fair. What do you think about the use of Bitcoin or other cryptocurrencies for countries with an unstable dollar?
Well, you mean like El Salvador? I mean, El Salvador doesn't even issue its own currency, which isn't, necessarily a problem. It could be a benefit. I mean, now they use the US dollar. And I think the dollar is preferable than trying to use Bitcoin. I mean, the dollar's got a lot of flaws. I mean, I'm not a big fan of the dollar either, but it works a lot better than Bitcoin as a medium of exchange or as a unit of account. As a store of value, I mean, I think as a long-term store of value, the dollar doesn't work either. Neither does Bitcoin. But over a short window of time, an hour, a week, a month, I think it's more reliable than Bitcoin. And so it's certainly easier to use. But look, what countries should do if they want a sound monetary system, we have one. It's gold. I mean, gold has functioned as a monetary medium for thousands of years, and it does a very good job of money. And once you adopt the gold standard, that doesn't mean that everybody has to lug around gold bars. You can have money substitutes, which are paper currencies that are backed by gold. You can even have a digital currency that is backed by the same gold that have all the efficiencies, of cryptocurrencies without any of the problems, without the volatility, and with the reliability of knowing that you have something that's going to maintain its value over time. So that's what countries should be looking at. They shouldn't be sidetracked into this, crypto craze. But obviously, I think they get pushed there because there are a lot of people in Bitcoin and other cryptocurrencies that have a vested interest in trying to get others to adopt it, because that's the nature of this game that they're playing, right? It's a pyramid scheme, Ponzi. You need more people, right, to come in to bid up the price of Bitcoin. I mean, if you want to get out, right, if you're one of these Bitcoin billionaires, but you actually want to do things with your billions, you want to acquire other things. You just don't want to have your billions all in Bitcoin or Ether or whatever your currency is. You want to buy real estate. You want to buy, a private plane and a yacht, and you want to do all the things that the rich people do, right? You need a market for your Bitcoin. You need somebody to buy. That's why they're really interested in getting institutions, because there's not that many individuals really that can write the big checks where you can get the volume. So they're trying to get institutions or countries to believe in this nonsense so that they'll buy Bitcoin so that they can sell theirs, right? That's what you have to do. But now the people who are buying off these whales, they're going to have to find even bigger fools with even deeper pockets willing to buy their Bitcoin, because that's how this thing works. You always have to find another buyer to come in, because as I said earlier, nobody wants Bitcoin, right? Because you can't do anything with Bitcoin. You can't, eat your Bitcoin. You can't plug your computer into it and power it. You can't, pour it into your car and drive it. It's not a commodity that has any actual use, and it's not a good or service. I mean, people say, well, nobody wants gold. I hear all that all the time from the Bitcoiners. Sure they do. People want gold for all sorts of things. I mean, it's the most valuable metal in the world. I mean, it's used in all sorts of industries, apart from jewelry, which is obvious. And it's not an accident that we make jewelry out of gold. Jewelry is made out of gold because it's better when it's made out of gold. It works better. It lasts longer. But it's a great conductor of electricity. And there are a lot of things that gold can be used for, in medicine and, not just dentistry, but actual medicine. I mean, people ingest gold. I mean, it does stuff. And they use it in aerospace and all sorts of things. And even if you don't use the gold yourself, somebody else will use it in the future. That is the beauty of gold. Because if I don't need the gold today, I can hold on to it, and somebody else can use it in the future, because while I'm holding it, it doesn't lose any of its properties. In fact, I can hold it for 100 years. My children, my grandchildren can hold on to it, and then in 1,000 years, somebody can use that gold, and it's just as good as if they had dug it out of the ground, that day. It doesn't decay, it doesn't rot, nothing happens to gold over time. So gold can function as money, but Bitcoin, since nobody actually needs Bitcoin, everybody who owns it just has to sell it, because there's no back-end user like gold. There's no jeweler who needs gold, right? There's no computer chip manufacturer who needs to buy gold. So you always need another speculator to buy your Bitcoin or any other cryptocurrency. So it's a constant promotional campaign, where once you're in it, you now have to convert other people. You got to bring more people in. And that's where you get all this pie in the sky evangelism, all these promises of, all you have to do is buy Bitcoin and you're going to be rich. You're going to be rich beyond your wildest dreams. You're not going to have to work. You're not going to have to get a job. That's old fashioned. Trying to build a business and get rich slowly. Just buy a cryptocurrency and you'll get rich quickly. All you have to do is never sell, right? That's what they tell you. Just buy it and never sell and you'll be rich.
Okay, so this digital currency backed by gold, that doesn't sound like a bad idea at all. Tied to something stable.
The government wouldn't like that, because it would be a big competition to the crap they put out, their fiat currencies. But you're not going to get rich quick buying a digital currency backed by gold.
Yeah.
I mean, gold doesn't make you rich. Gold keeps you rich. If you're already rich, you can stay rich by owning gold, right? You don't get rich. Gold preserves its value. Now, I personally think gold is underpriced right now relative to a lot of other commodities. So I think there is an opportunity there. But it's not like it's going up tenfold in real terms, right? You can't make that kind of promise. Gold could go up 10 times, but only in an inflationary world where everything else maybe is going up 5 times. So if the price of everything else goes up 5 times and the price of gold goes up 10 times, well, then in real terms, gold is doubled. But, the pie in the sky promises of Bitcoin, it's going to 1 million, right? Or it's going to even a bigger number than that. That's not going to happen to gold. So you're not going to get that huge speculative element. Now, where I think there is a big speculative opportunity, and I'm positioned myself, I have a lot of my own money there, and I, encourage clients who want to speculate, it's in the gold and silver mining companies. Because I think the real value of gold is going to go up, maybe double or triple in real terms. And in nominal terms, much more than that. But that's because everything else is going to go up. But I think that is going to mean these gold mining stocks are going to make a lot more money than the analysts currently believe. And so that's what's factored into their share price. But since I think everybody is wrong as to how profitable these companies are going to be in the future, the price right now is too low. So I think there is an opportunity. And I think the people who are gambling in cryptocurrencies, who think they're going to get rich, there actually is an opportunity, I think, to, have, an investment home run if you get into the gold and silver mining stocks. I think, part of the problem now is that since so many people incorrectly perceive that Bitcoin is, the new gold 2.0, they're missing out on that opportunity. And I think a lot of people, when they're valuing these mining stocks, if they think that in the future people are going to prefer Bitcoin to gold, that's one of the reasons that these stocks are so cheap in the present, because people have this false vision of the future where gold is, doesn't have the monetary value that it had in the past. But that's not true. I mean, gold's future is just as bright, if not brighter, than its past. It's Bitcoin that doesn't have a future.
Okay. That's a pretty solid argument. So you suggest that do you suggest people just avoid Bitcoin altogether?
Well, look, I do. But, Jamie Dimon was, made news the other day because, JP Morgan, I guess, is, letting their clients trade Bitcoin. And he said, look, I think it's worthless, which is true, but some of my clients don't know that. And so they want to trade it. And so I'm going to let them. Basically, they're big boys and girls. They're adults. If they want to do something dumb, who am I to say that they can't? Now, you might want to say, hey, come on, Jamie, you got some kind of fiduciary responsibility. If you're smarter than your clients and they're, doing something foolish, maybe you should, try to stop them, right? I mean, it's like the bartender saying, look, my customer, he wants alcohol. Who am I to say that he's had too much to drink? Well, maybe your judgment is better, especially if the guy is drunk. You don't have to keep giving him more alcohol when you're the one that's sober, and you got some people drunk on crypto profits, and, you got, the bartender realizes, what's going on. But part of his argument, I guess, or the way Jamie Dimon looks at it is, look, if they don't drink at my bar, they're going to the bar next door. Mm-hmm. So I might as well be the one that makes the money. Or maybe even a better analogy would be a casino, right? He sees his clients at JP Morgan gambling instead of investing, because that's where the action is. They want to gamble. And he's like, well, if I don't let them gamble here, they're going to take their chips across the street and gamble in another casino. And so why not, they're going to do it anyway. And so, why not let them do it? And so, in my mind, look, people should be free to make their own mistakes. And, I'm fine with a lot of young people. Ultimately, look, young people who are into crypto, I think that they're going to learn a very valuable life lesson from the money they lose. And that's the time to learn lessons losing money, when you're young, because you have a lifetime to make it back and you have a lifetime to learn from those mistakes. It's the people that are, older, that are putting their retirement and IRA money and stuff like that. This is a problem. And I don't like the way a lot of people in the mainstream media, in the investment community, have now jumped on this bandwagon and are really encouraging people to gamble in these cryptocurrencies by kind of validating them. And I think a lot of that has to do with the advertising money. I mean, I'm very critical, let's say, of a network like CNBC that has totally legitimized Bitcoin, but I think it's because they're beholden to their advertisers. Because I think their number one advertiser is crypto-related companies. I mean, you can't watch CNBC every single commercial break. I'd say half the commercials, if not more, are for cryptocurrency-related investments. And so that's what's driving all the content on the network. They're playing to their advertisers. And so they're really sacrificing their audience in order to placate the advertisers. Because the advertisers want to advertise there because they know that it's like a giant infomercial where you have all of the on-air personalities hyping up Bitcoin all day long. And the only guests that they invite on really are pro-Bitcoin. And every once in a while, they'll bring on somebody who's kind of bearish, but then everybody will argue with that person. But when the bull comes on, who's bullish about Bitcoin, they're all like, yeah, they all agree. And the most ridiculous thing about it is, a lot of the people who are pumping Bitcoin will say the same type of things that I say about the Federal Reserve and fiat money and inflation, except when I said them on CNBC, everybody laughed at me and said, well, that's ridiculous. But when the Bitcoin people say it, oh yeah, it makes perfect sense, right? Somehow the arguments are valid as long as they lead you to Bitcoin. But if you say the same thing, but then you don't punctuate the comments by Bitcoin, right? Then, they disagree with you. And if I said you have to buy gold, they would say, oh, Peter, you're just saying buy gold because you have a gold business. I've never heard once any of these crypto people who come on CNBC, I've never heard one of these guys say, well, aren't you just bullish because, you're in a crypto business and your business depends on people buying crypto. And so aren't you just talking your book? They're never accused of doing that, but I never went on their air without being accused of talking my book, right? So it's a complete double standard. So I do think that at the end of the day, there's going to be a lot of lawsuits from a lot of people who lose a lot of money. And we'll see how that all shakes out. But again, it's a free market. People need to do what they want. I mean, I don't think fraud should be legal. I'm not an anarchist. I believe in, certain criminal activity. And I think to the extent that some people are being fraudulently induced into buying into crypto, and they can prove that they were defrauded, and maybe they'll be able to recover some of their losses, through the court system. But most people are going to get what they deserve. Most people are not being defrauded. I mean, they're just delusional. I mean, they're believing, a pipe dream. I mean, it's the easiest thing. I mean, get rich quick schemes have been around for a long time. I mean, the crypto community didn't invent that. And, it's, unfortunately, with the way the economy is right now, with all the government, all the regulations, it's a lot harder to achieve wealth legitimately and honestly now than it was 50 or 100 years ago when we had a lot more economic freedom and it was a lot easier to start a business because you didn't have to deal with all the government red tape and all the regulations. And so now so many people are basically left with the only hope, basically a lottery. Like I'm going to buy Bitcoin like I'm buying a lottery ticket and just hope that I get rich by winning the lottery. Except they think that they're going to win for sure, right? I mean, most people buying lottery tickets realize that it's a long shot, that they're probably going to lose, but they buy the ticket anyway, just in case. But all the people who are actually buying Bitcoin, they're 100% certain that they've got the winning ticket. So that's what's going to make it particularly difficult when reality sets in and everybody wakes up to that reality. That all these dreams were just dreams and they're not coming true.
Okay, so two questions. One, do you have any guess about what the time frame for Bitcoin is before people start realizing that that might not have been a good idea? And then
clearly I have no idea about that. I mean, look, I've been talking about Bitcoin being, fool's gold and tulip mania and, Ponzi pyramid, since it was first brought to my attention when it was under $10. So, clearly I don't know how big the bubble is going to get. I'd have to say that at this stage, when I first learned about it, hardly anybody knew about it. They didn't talk about it on television. I only knew about it because of the libertarian circles that I was in, So I knew about it early on, but now everybody knows about it. And so I have to believe that there's not much left on the upside. Could it double again? Yeah, sure, it could. But that's nothing compared to what it's already done. And that's not what people expect. People are not buying Bitcoin because they think it's going to double. Because a lot of other assets can double. There are a lot of assets that are going to do a lot more than double. So if all you think you're going to get out of Bitcoin is double, there's no reason to take the risk. Because Bitcoin can go down 80, 90, 99% much quicker than a lot of other assets can. So the risk reward wouldn't be there. And I don't think people are buying it because they think it's going to double. It's because they think it's going to 10x or 20x or 50x. And that's why they're there. And I think the odds of that happening are astronomically low. Again, I don't even know if Bitcoin can double. Everybody seems to think it's a sure thing. It's going to hit 100,000. When everybody thinks something's going to happen, it usually doesn't. So it probably won't even get there. Let's see if it makes a new high. It could do that, right? The high was like 65,000. We're not too far away. We're 55,000, 56,000. So maybe it'll make a new high. Maybe not. But I don't know. But I have a feeling that when gold and silver finally start to move up, that could be the pin that pricks the Bitcoin and crypto bubble. I think the fact that gold and silver haven't really made a big move is creating or helping to feed the argument that it's because Bitcoin has replaced gold, and that's why gold's not going up. But I don't think that has anything to do with it. I think the reason that gold is not moving up is because the big money does not believe inflation is the threat that it is. I think everybody is waiting for the Fed to fight inflation, to get tighter monetary policy, and everybody assumes that tight monetary policy, or at least less loose than what we got now, a tightening, is going to be bad for gold because they think that gold is the inverse to interest rates. That if rates are moving up or monetary policy is tightening, that the price of gold should be falling. And so traders are factoring in that future decline that they expect into the current price. And that's what's stealing gold's thunder. It's ignorance of inflation and what's going to happen. It's not that people are buying Bitcoin instead of gold. Mm-hmm. I think that there are some people who are buying Bitcoin, but they're buying Bitcoin instead of other speculative assets. Maybe they're buying Bitcoin instead of a stock, a penny stock, or whatever they would have gambled in. But I think that once gold really starts to shine, as people start to realize that inflation is not only not transitory, but that it's going to get much worse, and that the Fed is not going to be able to do anything about it. Mm-hmm. And so then people are really going to need a hedge against inflation. And they're going to buy gold, they're going to buy silver. That's what they've always done. Those commodities make sense as an inflation hedge because they're commodities themselves that have real uses. You can't hedge inflation by buying something that is not itself a commodity. Because what makes gold an inflation hedge is that gold is a metal. And so you can hedge the price of other metals, copper, nickel, zinc, with gold. Gold is a commodity. So you can hedge the price of coffee, the price of cotton, price of lumber. There are other commodities, and these commodities historically have relationships based on their use cases, mm-hmm. One against the other. but Bitcoin has no use case. It's not used for anything. And so there's no way to know, how much Bitcoin there should be for, a bushel of wheat or a barrel of oil or a pound of copper. I mean, it's nothing because you can't do anything with it. There's no way to value it. So it can't be an inflation hedge. So when people really want an inflation hedge and gold starts to respond, I think that could be a big problem for the Bitcoin narrative. And, once it really starts to fall, it's a whole new dynamic. Because right now, the narrative is buy and hodl because you're going to get rich because it's always going to go up. And the fact that people don't want to sell is what can keep the price going up. But what happens when new money stops coming in and the old money wants out? Well, the old money can't get out if the new money doesn't come in. And so that's why the whole thing can implode, right? It's just on itself. The bottom drops out and you get a complete crash because only a few people wanted to get out. If there's nobody who wants in, just a small volume can sink the whole thing.
Okay, one of the values I think this is my last question, but one of the values I think people find in something like Bitcoin is that it's decentralized. So
again, that's part of the pipe dream about, we want to get away from the governments, we want to get away from the banks and the financial institutions, and I share that. I mean, it'd be great to get away from that. But as I said earlier, the government doesn't want you to get away from it. That's where all these new regulations are going to come in. You look at like a company like Uber, right, which, is a real business with a real service. But one of the values that Uber had was it got around all of the government rules and regulations that made taxi cabs so expensive, right? So Uber comes in and arbitrages that by saying, hey, we're going to get around all the government rules and regulations. Same thing happens with like an Airbnb. Hey, we're going to get around all the government taxes and other regulations on hotels, and we're going to pass on that savings to the consumer. And so that's kind of what Bitcoin was trying to do. We're going to pass on the savings of escaping all this government scrutiny, all this government regulation. Well, you can't do that for long because the government is not going to allow that to happen. They're not just going to let that. You can see that happening as all these governments are trying to crack down on like the Ubers, trying to make them comply with all these labor laws and taxes and all this stuff that is going to reduce their appeal because now they're going to have to deal with these higher costs and they're going to have to pass those higher costs on to their customers. And now, hey, Uber's not as good a deal anymore. It's not saving me all this money like it was before. So, I mean, that's part of the allure of Bitcoin. That's part of the sexiness of the story. And that's why it really appeals to the libertarians, the free market people. But it's gone so much beyond that now because there are a lot of people that are buying Bitcoin that are, don't even believe in limited government. You have a lot of socialists that are buying it. They're just buying it because it's going up. I mean, everybody is buying it because they want to get rich. I mean, look, I've talked about these guys on CNBC. They love the Federal Reserve. They love the fiat monetary system. They can't get enough of it. Yet they love Bitcoin too because it's going up and because the advertisers are showering them with money. So now it's gone beyond that. I mean, you have to try to philosophically come up with some kind of reason, right? You can listen to a guy like Michael Saylor, talk about Bitcoin. And if you just, listening, he's on and on and on. He's all the time touting it because, he's got so much invested in it. But, it sounds intelligent if you don't actually pay attention because he uses a lot of big words. And as long as you don't stop to, actually dissect the meaning and to realize that it's complete nonsense that he is spouting, that nothing actually makes sense. When you actually dissect what he's saying, it's a load of crap, right? But it's just designed to just, get people to buy Bitcoin and never sell it. And, so that's what's happening now with it. But again, once the dream turns into a nightmare, I mean, this happened with, the dot-coms, it happened with real estate, you could come up with all kinds. I talked about Beanie Babies a lot. I mean, people thought they were going to get rich on Beanie Babies. And of course, once you get into a bubble and you have that mindset, you don't see any reality. I mean, you get this, case of cognitive dissonance, and nobody can rain on your parade. And that's, it becomes a cult. It becomes a religion for people, and nobody can tell them that they're wrong. And because there's such a built-in bias once you get involved, and you kind of have this whole dream about the way your life is going to be, because you found this this fountain of youth, right? This monetary fountain of youth, and you're going to have this fantastic life. You don't want to hear anything about that. Hey, it's not true. Just psychologically, your whole brain now is going to tune out anything that is going to contradict what you've built up in your mind and what you think is going to happen. And I think to a lot of people, what they think is, if I give up, if I sell, I'm just going to miss out. It's like, that's the FOMO, right? The fear of missing out. And that is, even more powerful than actual fear, right? People, it's like, the greed and the mentality where if I can't sell because my friends won't sell, and I'm going to be the idiot that sells, and they're all going to get richer than me. And so, but that emotion is going to eventually be replaced by the fear of losing whatever they've got. But I think Bitcoin is going to have to drop precipitously before that emotion kicks in. So people are already probably going to lose 70, 80% of their money before they start getting worried about losing the rest. Of course, they should be worried about losing it right now, but that's not going to happen. But once they lose most of it, then they'll be worried about losing what they got left.
Okay. That was very entertaining. Thank you, Peter Schiff. That makes sense too. That makes sense. Where can people find you online if they want to find you?
Well, they can go to the Peter Schiff Show. My podcast is on Schiff Radio. It's also on my YouTube channel, The Schiff Report. So if you just want to listen to my, content, I don't just talk about Bitcoin. I mean, I can't not talk about it. It's like, so I do talk about it, but most of my podcasts are not about Bitcoin. They're about bigger things. And so I talk about all about that. But again, too, if you want to really build a portfolio, an investment portfolio that will do well in the world the way it's going to look. I think we are on the precipice of a major change in the global economic order. I think the days of the dollar being the world's reserve currency are numbered, and that number is obviously much smaller than it was before. So I think that Americans are going to be in for a rude awakening when the dollar depreciates relative to other currencies and our standard of living goes way down. I mean, we're going to have to consume a lot less and produce a lot more. We're going to have to borrow a lot less and save a lot more. And, this is the antithesis of what we've been doing. And it's going to happen at a time where capitalism has never had a worse reputation and socialism has never had a better reputation. So it's very dangerous economically and politically for the United States at this particular point in its future. But to understand the way the world is going to look, the way relative assets are going to be valued in the market, if you want to, be on the receiving end of this, this transfer, you need to have the right portfolio. You need to be investing in the emerging markets that are going to ultimately receive a lot of the purchasing power that Americans lose. You have to have the right currencies, the right asset mix. I mean, fortunately, as everybody has been piling into all these hyped up momentum stocks that have been driven by inflation, there are some good buys around the world in traditional businesses, companies that actually make stuff, that have real plant and equipment, that have real resources, that pay good dividends right now. So there are a lot of investments around the world. And that's what we're trying to tap into for our clients at Euro Pacific Asset Management, trying to build these portfolios that will do well in stagflation, with a weak U.S. dollar, a weak U.S. economy, a less productive U.S. economy, and more growth, happening outside the United States. Now, as an American, I'm not happy about that. I don't like the fact that this is going to happen, but I'm not investing based on what I would like to happen. It's based on what I expect to happen. And if I can do something in the future to help influence the path that we take, and I'm trying my best to get us to reject government and reject fiat money and embrace capitalism and the free markets and the Constitution. I mean, I know that even if we make the right choices, it's going to be difficult first, just like if somebody who's a drug addict and they make the right choice to go straight, first they're going to go through withdrawal. They might have to go to rehab, and it's not going to be pleasant. So we're going to have to go through that type of monetary withdrawal in order to come clean and have a healthy, vibrant economy again. Hopefully we do. Of course, that may never happen, in which case my investment strategy is even more important than if we do the right thing eventually. If we don't, getting out of the dollar and getting into other assets is much more important. Again, I think it's a mistake to get into crypto and think that that's what's going to protect you. I mean, if people want to put a small amount in crypto just in case I'm wrong, if it's a small amount, it can't do that much harm, right? But the problem is most people that are into it don't buy a small amount. Once they get a small amount, they get so greedy, they get a big amount.
Yeah.
So it's very, very, and I don't even want a small amount because I'm so convinced that it's going to go to zero that I'd rather take that small amount and gamble on something else.
Okay.
But anyway, so my website is for the asset management company. You can see that above my shoulder. It's Europe Pacific Funds, epacfunds.com. My gold company is shiftgold.com. If anybody wants to buy physical gold and silver as a store of value, as an inflation hedge, that's what you should do. Don't buy, we don't deal in numismatics or rare coins. I think that that's a whole different animal. I think a lot of people that really want to buy bullion end up getting talked into buying numismatics because the salesmen make a lot more money selling those products. So we don't sell those products. So, we're looking out for the customer. And if you're looking to buy gold, that's what we're selling. We're not, selling collectibles. We're selling an actual metal that has value and therefore will be a hedge against inflation.
Cool. Thank you, Peter, very much for coming on.
Oh, my pleasure.
Hey guys, I wanted to talk to you about NordVPN. I use VPNs when I'm traveling, which I'm doing a lot. Did you know they don't have Disney Plus in Serbia? Do you know what kind of problem that is? Well, they do with NordVPN. Hopefully that doesn't cause a problem with me and Serbians in the future. I can't believe there are areas of the world that would ban Disney. Anyway, this isn't supposed to be about Disney or getting access to Disney. It's about NordVPN. Not only are they sponsoring me, which is fantastic, but they allow me to get into Netflix wherever I am. If I'm somewhere sketchy, I can also protect myself from getting my information stolen by using NordVPN in said sketchy areas. Or if you're doing something sketchy on the internet, a VPN is probably what you're looking for. I also really like NordVPN because it has the fastest VPN in the world. It doesn't slow down my internet when streaming in different countries like other VPNs I've used. NordVPN is something I would recommend. VPNs can come in handy in restaurants, airports, and other countries that block certain websites. I have a fantastic code for 73% off annually, which is pretty huge. Weird number, pretty huge. 73% off at nordvpn.com/TMPP, like the Mikhaila Peterson podcast. Code TMPP for 73% off. That's nordvpn.com/TMPP for 73% off annually. Enjoy the rest of the episode. Robert Breedlove, welcome to my podcast.
Mikhaila, thank you. I'm glad to be here.
This should be good, but before we get started, can you give a brief background about who you are and what it is you do?
Sure. My background is in accounting and finance. I'm a former hedge fund manager in the crypto asset space. And then, largely influenced by your father's work and the work of some others, I've decided to pivot full-time into education. And a lot of my educational efforts are focused on history of money, economics, philosophy, all connected to Bitcoin. So a lot of people in the Bitcoin universe call this the Bitcoin rabbit hole, where you start to ask these fundamental questions like, what is money? What is government? What is value? And it just unearths these layers of understanding the world that you didn't previously have. So that is the name of the show, actually, the What is Money show that I recently just started. And I'm just talking to the smartest people in the world about these topics, typically in a long form setting.
That's very cool. Smartest people in the world to talk about what is money and other topics. That sounds fantastic. Okay, so I guess we should start off first with probably what is Bitcoin?
Yeah, it's a great question. And I guess we could say that Bitcoin is the most superior monetary technology that has ever existed, which naturally segues into the question, what is money? And there's a lot of answers to that question. One of the most basic I like to use is that money is simply a tool for expressing value across space and time. The word tool is a bit loaded because we typically think of a tool as something physical, but money is more of a social construct. And people naturally select a monetary technology that exhibits 5 properties historically. And those are divisibility, durability, recognizability, portability, and scarcity. And to just kind of gloss over some history, historically, before Bitcoin, the best thing we had for money were metals, monetary metals, actually. Gold specifically became dominant because it best exhibited those properties, and of the monetary metals, it was the most scarce. But with Bitcoin, we have a tool that has perfected all of the properties or services we seek in money. Everything that money needs to do, Bitcoin has essentially perfected the deliverance of those properties. So because it's just information, it's infinitely divisible. You can take each Bitcoin and break it down into 100 million subunits called Satoshis. That limit can be increased. If Bitcoin was ever not divisible enough, we could increase that limit. Because Bitcoin's stored as distributed information all over the world, it's effectively infinitely durable. Something kind of like the Bible, actually, where like the individual Bible is clearly not indestructible, but the Bible itself as a book, as a concept, is pretty much infinitely durable because it's everywhere. It's everywhere and nowhere. Bitcoin's infinitely portable because it's just information. You can move it at the speed of light. And then Bitcoin's infinitely recognizable, meaning that you can audit the total supply. You can verify every transaction. You can effectively be your own central bank by running software. And then finally, and very importantly for money, Bitcoin is, as I've argued in some of my writing, the discovery of absolute scarcity. So everything in the world has always been relatively scarce only. Like the more time we allocate towards producing anything, we can produce more of it. Of all of the goods and commodities in the world, gold was the most relatively scarce commodity. That's what gave it this monetary property that caused it to have market value as money. But with Bitcoin, we have perfected that property of scarcity. We have something that is digital and has a perfectly fixed supply. And it's really hard to overstate how big of a deal this is because we've never had anything that we know with absolute certainty the supply is fixed at that amount. In the case of Bitcoin, it's 21 million. So that's a nutshell answer. The Bitcoin is the best money we've ever had. I guess the big thing to understand that a lot of people don't is that money is a technology. We typically think money today, we think it's a product issued by government, but that's not the case. That's not the truth, actually. Is money emerges on the marketplace as a technology, people favoring those properties of money. And then I guess we could get into a bit of how we went from gold to paper money, if you like.
Actually, that would be interesting. But before, I have one question before we get into that, but gold to paper money sounds good. What about the fact that you can't use Bitcoin physically for something? So for gold, you could turn it into jewelry or use it in computers, or you could use it. But for Bitcoin, you can't use it like that. Do you see that as a problem?
Yeah, so everything that trades in the marketplace, its value has two basically functions. So one is utility value, which is what you're describing. You can use it for jewelry. You can use gold in dentistry. You can use it in computers. This is the utility value of gold. And then there's another component of demand for gold that is its marketability or its monetary use case. So when we look at gold's market cap today, say it's around $10 trillion, approximately 1 or 2 trillion of that market cap, which is the total value of gold worldwide, is the demand configuration for its use as a utility, right, in dentistry and computer and all these things. The other $8 trillion of gold's market cap is demand for gold as money, to hold it as a store of value. So this is actually another definition of money. Is like everything exhibits a little bit of monetary premium. Like anything, because you would hold it in anticipation of trading it in the future. So gold is just a thing that's held mostly for its marketability aspect of value. So you could say another definition of money would be that commodity which exhibits the greatest marketability or monetary premium relative to its utility value. So gold was, say, again, 8 to 2, like a 4 to 1, right? Bitcoin has perfected this again by perfecting the properties of money. Bitcoin's pure monetary premium. There's no industrial use to it at all. So you could argue that this is a defect, but Bitcoiners would actually take the position that this is an expression of Bitcoin as a pure money. It's like the first time we've discovered a pure money. This technology is only good as money. It does nothing else. Whereas gold was just kind of this analog version of Bitcoin. We were just doing our best with what we had.
That's interesting. So that's why it's referred to as gold 2.0.
Yeah, digital gold, which is a great analogy, but you have to really understand gold, and not many of us do.
Yes, this is true. Okay, you're talking about gold into paper money. Is that a Bitcoin tattoo? I see it.
My only tattoo is a Bitcoin tattoo. Yeah. Skin in the game is what it means to me.
Okay. That makes sense. Okay. You had something for that. That's good.
Yeah.
Okay. Bitcoin into money. How did that happen? Gold into paper money. How did that happen?
Sure. So historically, people are trading with one another in the global economy. Everyone's operating in their own best interest over time. This is what causes the market to generate prices, right? As people trade against one another, a price emerges for a good. It's constantly changing. It's also what generates innovation. So as an entrepreneur can figure out a better way of doing something, he or she has an incentive to sell that into the marketplace. And that's how we all become more productive and advance. So throughout this long history of people trading against one another, gold was selected as money because it best exhibited those properties. But the shortcoming of gold and monetary metals more generally was in the portability property of money. Mm-hmm. So gold was really good for holding value over time, in that it exhibited reliable scarcity, in that no matter how hard anyone tried to produce gold, it was a commodity whose supply we could increase the most slowly. So if I'm going to park my wealth in something as an entrepreneur, I want to put it somewhere that's maximally resistant to the willpower of other people. Otherwise, people are just going to, if you just put it in copper, for instance, if you monetize copper, people would go out and produce a lot more copper a lot more quickly, and they could dilute the value you had stored in it. So this market process is like a game theoretic discovery process where you're looking for the most scarce thing. So that's gold was selected for that. It's a great tool for storing value over time, but because it lacked portability, it struggled in its ability to express value across space, right? Gold's heavy, it's physical, it's expensive to secure, it's expensive to move. You need armed guards, you need ships, you need safes, you need banks, all of these things. So the market developed this warehousing function where you could just put your gold on deposit with a warehouse custodian. The custodian would issue paper redeemable for that gold. You could then, entrepreneurs were then free to go into the marketplace and transact in these paper tokens that are redeemable for gold. And they basically monetized. They became as good as gold because they were redeemable for gold. So all of a sudden you had the property of scarcity attached to this paper certificate because it was redeemable for gold, but you also had the portability of paper, right? Paper is very light and easy to move around. And it became even better when we abstracted the paper into electronic form. So that was the purpose of banking, and the purpose of currency is really to increase the transactability of gold, to reduce the transaction cost, to increase the velocity of money, is a term used a lot in economics. The problem, of course, comes that you now have to trust the custodian. Whatever they say, whatever gold they say they have on deposit, they have to be telling the truth. Otherwise, it's a fraud. And those warehouse custodians became banks. Banks became central banks. And as I've argued in a lot of my writings, central banking is the greatest fraud in human history. And that that dollar is no longer redeemable for gold at all. It's just a confidence game that's imposed by bureaucrats on market actors. But it's been done in a way that, slowly enough, and there's been enough propaganda, I guess, built up around it that we don't need gold, we don't need monetary scarcity. The government should just be able to control the money supply at will, to control the economy, frankly, that people have just forgotten all of this history. And I think it's been pretty disastrous. We came off of gold in 1971, so it was 50 years ago. And as we see today, the world is in disarray in a lot of dimensions, culturally, economically, and I think government has kind of run amok as well.
Kind of run amok. Isn't it strange then that the digital currency, that the big one, Bitcoin, wasn't backed on something like gold to begin with? Or do you think that that's actually an upside? Like, you would have thought that the way things have gone, it would have been created backed by something like gold.
Well, here's the thing about when we say backed by gold, we have to look one layer deeper. Gold itself is backed by energy or proof of work, right? We're looking for a money that we cannot counterfeit. So gold, because it's so hard to produce, the most difficult commodity to get above ground, it is secured by proof of work. Like, if you want to go out and harvest the monetary premium that's stored within gold, you have to expend energy, time, resources to go and dig it out of the ground. So in my view, gold is just the analog version of proof of work, which is the consensus and security model for Bitcoin. Bitcoin is the same thing, only it's a more direct pathway to monetizing energy. So instead of having to spend energy to go and find gold mine and get it above ground and sell it into the market, you can take Bitcoin mining directly to any energy resource in the world. And you just put this mining rig on top of it. This could be a stranded gas well that's way off grid, that's not economic to sell at all. You can now put Bitcoin mining directly onto that resource and monetize this energy that would have otherwise gone unused. So when we think, I think it's very easy to think like, oh, shouldn't we have backed Bitcoin by gold? But Satoshi actually went a layer deeper. It's like, well, what's backing gold? Energy is what backs gold. So he just directly mapped Bitcoin onto energy.
Although you could argue that the actual physical gold and what you're able to make it into also backs gold, yeah?
Yeah, you're back to that original debate between utility and marketability. So it's like, do you want a money that does other things, or do you want a money that's a pure money? And if we just look at the judgments of market actors historically, they've always favored the purest money. So the bet on Bitcoin is that that market dynamic would continue to play itself out towards the purest money, and that is Bitcoin.
Okay. Next question then. Part of the upside of Bitcoin and Bitcoin, let's stick with Bitcoin, is it's decentralized. But do you not think that at some point the government's going to get its paws on Bitcoin?
Well, this is the beautiful thing about Bitcoin, is that it's a monetary technology that's wrapped in military grade encryption, optimized to survive any attack or any threat. And the largest and most obvious threat here is the nation state attack. And really, Bitcoin has made all of the design trade-offs to optimize for survivability. So it really is just designed to churn out a new block every 10 minutes, or on average every 10 minutes, and maintain a supply cap of 21 million. It has foregone all of the other bells and whistles that you'll see other crypto projects experimenting with. Ethereum has a lot of these extra features. But Bitcoin is shunning all of this extra feature set to make sure that it is optimized for survivability. Because if Bitcoin succeeds meaningfully in the way that many Bitcoiners think that it will, it is a threat to the monopolization of money, which has been the greatest source of wealth for governments historically. Right? I mean, imagine if you're running a business and you owned a money printing machine. Every time you ran into any problem at all, every time you made a bad decision or there was some unforeseen circumstance, you could just press print and, paper over the loss or paper over the bad decision. It's almost intuitive how much you would abuse that machine. And that is exactly what governments have been doing really throughout all of history, but especially in the past 50 years, that we've systemized the global financial system and removed it from gold. So that another way to think of gold is that it held governments accountable. So if a government was irresponsible with their monetary policy historically, which is to say they printed way more money than they had in gold reserves, gold would leave their country. So they would actually hurt themselves economically by being irresponsible. But by breaking the peg to gold, they're able to completely run amok. There's no accountability whatsoever. No one can call their bluff.
How did that happen? Like, who agreed that it wouldn't be linked to gold anymore?
So following World War II, the U.S. won World War II. We held the Bretton Woods Conference, and we dictated to the world that the dollar would be pegged to gold and that all international currencies would be pegged to the dollar. So we had this pseudo global gold standard. But this gave the United States the advantageous position of being able to print as many dollars as they want. And we could basically send these printed dollars to other countries. They would send us goods and services. This has been infamously called the exorbitant privilege to be the global reserve currency, because you can just basically confiscate goods and services from other producers so long as they don't redeem your dollars for gold. But the United States we had the gold window open for countries to redeem. And so countries started calling our bluff over time. They would actually submit dollars and demand receipt in gold, payment in gold. And in 1971, when Germany demanded payment in gold because they saw that the United States was printing too many dollars, President Nixon at the time, did the infamous Nixon shock, where he took us off the gold standard. It was said to be a temporary measure. And of course, like every government temporary measure, it was permanent. And things have gotten really bad since from an economic standpoint.
Wow, I had no idea about that. Thank you. I took American history and they didn't teach me that.
It's funny, yeah. Funny how they rewrite the history books to leave out the important stuff.
Okay, so then what about the volatility that we're seeing in Bitcoin right now? Like, is it safer if you're trying to maintain your wealth? Is it safer to put your money in something like gold that seems to just stay stable? We don't know what the future is going to bring. Like, what about all these older people that are putting money into Bitcoin and it's going up and down a bit? What, do you still think that's the safest route? Because the volatility can be scary.
Yeah, so volatility, I guess the first thing to understand is when you're thinking, well, here's the very first thing to understand is volatility and market capitalization, which is the size of the asset, are inversely proportionate. So the smaller an asset is, the more volatile it will be by necessity. You could look at something like Amazon in the late 90s. You know, it was up and down. I think it was down 90% in 2001, and then it's grown 40,000% since. So as an asset becomes larger, it becomes more stable. We've seen this pattern play out with Bitcoin as well. As its market cap has increased, its volatility has declined. Bitcoin is around $1 trillion asset today. Gold, again, is around 10 trillion. So gold's volatility is less than Bitcoin's because it's larger than Bitcoin by a factor of 10. So that's really important to understand, is that as it grows, it becomes more stable. Kind of intuitive in a lot of ways. If you think about something on the surface of a pond, you know, and the ripples come. If it's smaller, the ripples are going to affect it a lot more, but if it's larger, it won't be as affected as much. Is maybe a useful visualization. The other thing to understand is that when we say volatility, we're talking about its price expressed in dollars typically. So, and this is a deep thing about money, is that it's part of our mental machinery. Like we're thinking in dollars all the time, right? You're negotiating or planning or whatever you're doing in your life economically, you're thinking in dollars. So there's this psycho-technological aspect to money too. Although it's a technology out in the real world, it's also something like literacy or numeracy. It's embedded in your thinking as well. And dollars are being rapidly depreciated. I mean, here's a stat that will really blow your mind. In the past 18 months, 40%.
I'm worried about this already. Okay. Okay, go.
In the past 18 months, 4 out of 10 or 40% of every dollar in existence was produced. So the Federal Reserve has been around since 1913. So for 108 years of producing dollars, 40% of those dollars were produced in the past 18 months.
What?
Yeah. So the dollar is being rapidly depreciated through excess production, again, because it's not tethered to gold. There's no accountability to governments whatsoever. You can just print money and dole it out at your whim.
Don't they know that goes badly? Aren't there laws in place so that they can't do that?
The Federal Reserve is an unregulated private institution.
What?
It's not federal, and it has no reserves. And it's an institution that never loses. It can print money, right? It just prints money. So to answer the question, don't they know that it ends badly? This relationship of humanity to money, this is the one lesson we keep learning painfully. Like every 3 generations, we seem to forget it. That, we can't print money to solve our problems. But every few generations, we convince ourselves that, no, we figured it out. It's different this time. We control the economy with these different levers. Those guys 3 generations ago didn't know what they were doing. It's all going to be okay. Well, right now, we're living through another one of those situations where there are people with enough, I guess, hubris or self-deception even to believe that they can print money ad infinitum and somehow control its deleterious economic consequences.
Okay. What do you think is going to happen with Bitcoin? If you had to take a guess.
Well, there's an old popular saying that says, "Don't tell me what you think, just show me what's in your portfolio." I hold 100% of my savings in Bitcoin. So 100% of my liquid savings I hold in Bitcoin. I do, based on my study of money, government, economics historically, free market actors have always favored the monetary technology that best satisfy these properties. Most of human history, actually, there's another lens to take on it, that we've been fighting over the gold for all of human history. Even the World War II situation I just described to you, the reason the U.S. won is because a lot of gold flowed out of Europe and into North America as a safe haven, a geographic safe haven from Nazi plundering. Because when Germany would invade a country, their first stop would be their central bank to raid their gold. So clearly war is very expensive. Countries are fighting over and funding warfare with money, gold, right? So I think that Bitcoin is the digital disruptor to gold. And this is something that is so significant because humans have been playing this game of gold since the beginning of time. We've been fighting over it. We've been coveting it. But the problem is that governments have gained, through this mechanism I've described, this ability to corner the market on gold or corrupt it or sever the monetary system from gold. Because central banks still buy gold, by the way. They're still the largest net purchasers of gold. So they're forcing people to use this paper currency that's not redeemable for gold, but they themselves are still acquiring gold. So the game of gold is still being played, even though we don't think in gold or we're detached from it. At the geopolitical scale, the game of gold goes on. China is the largest producer of gold and the largest buyer of gold. Clearly, they're the biggest threat to the U.S. hegemony. So this game goes on. My belief is that Bitcoin is almost like an inflection point into the digital age, that we're going into a time as transformative as the transition from agricultural to the industrial age. The industrial age to the digital age is similar. And I think that Bitcoin is going to disrupt gold and every other monetary network built on top of it, which includes dollars, euros, yen, everything worldwide. And I think this becomes the ultimate honest money, hard money store value in the world. It's the premier asset worldwide. And I view Bitcoin really as disruptive to those three things: gold, centralized government, which is the institution that hoards gold, and importantly, global warfare. World War I and World War II would not have been possible without fiat currency. The scale and duration of warfare is funded through fiat currency inflation. Before, when governments were on a gold standard, say historically, they had to wage war within the confines of their own balance sheet. They had a war chest, right? They have enough money to go to war. And what would typically happen is one of the combatants would go broke or go close to broke, and they would strike a deal. So war tended to be very brief, very intermittent, and quickly kind of resolved. Whereas, as Ron Paul said this, it's no coincidence that the century of total war and the century of central banking were the same century. Inflation, fiat currency inflation, has increased the scale and duration of warfare that led to all of the atrocities in the 20th century. It's been the stealth funding mechanism for every dictator, every internment camp, and every world war in history. So I think Bitcoin is a peaceful protest, frankly, against this economic tyranny that we've come to see in government.
Okay, that definitely went in a direction that I wasn't expecting. I don't think I've heard any of that before. That's very interesting. Okay. Need to look at my notes. What other questions do I have here? What happens potentially? So the only way Bitcoin is going to work is if people can use it easily, right? To buy things with it easily. So is it still going to be the mode of currency people use to buy things, or is that going to be on something like Ethereum? Because I've been tinkering around with both, and I know that Ethereum seems easier to buy things with, but that could just be because I'm doing things wrong. I have no idea.
So again, looking historically, gold followed this path of monetization, in that it was just a collectible at first. People just liked gold because it was shiny, right? You would wear it, you'd ornament yourself with it, etc. That created some demand for gold as a collectible, and then based on its scarcity, it then became a store of value. So people actually started storing wealth there long term, right? Intergenerationally even, whether in jewelry or bars or whatever. Eventually, once gold had stored enough economic value, people started to use it as a medium of exchange, right? There's an incentive. If you have something that has a ton of economic value stored in it, as that value grows, your incentive to spend it grows, right? Its purchasing power is increasing. You can go out and buy more things. So of course, there's a natural path for its incentives to turn it from a store value into a medium of exchange. Finally, when people are using it widely enough as a medium of exchange, that's when it starts to enmesh itself in our mental architecture. So we actually start to denominate prices in gold, right? Again, we think in dollars today, but the only reason we think in dollars is because they used to be redeemable for gold.
Mm-hmm.
So there's almost like this bait and switch that the central bank pulled on us. So we all were thinking in dollars because it was a free market money. And then it's like, oh, not anymore. It's just this paper currency. But because people are detached from this process and the dollar itself didn't change, they're able to get away with it. So that's the path you would expect Bitcoin to follow. It doesn't actually need to succeed, it doesn't need to be used widely as a medium of exchange. Like it can go on being a store of value for a really long time. Again, if store of value, the main property you want in a store of value is scarcity. I want to hold my wealth in something that I know that no one else can print or produce. And that Bitcoin's perfected that, right? We know with absolute certainty, if you hold 1,000 Bitcoin, you've got 1,000 out of a possible 21 million forever. So it's perfected that. You can then take Bitcoin and you can borrow against it. I mean, you can swap it for dollars. You can swap it into a medium of exchange as needed. So it doesn't need the medium of exchange function to succeed. That said, I would argue to look into the Lightning Network and to look into other higher order protocol development. So there's layers being built on top of Bitcoin that make certain trade-offs to make it much more useful, much more transactable. So similar to how we abstracted gold into a paper currency to make it more transactable. There's a lot of cost and slowness and energy expenditure at the Bitcoin base layer to keep it secure. That's a trade-off that it's making. But it makes different trade-offs at higher layers to make it more transactable. So I think the path of Bitcoin's evolution is in layers. So we have Bitcoin base layer. You'll see it become it's already very transactable on the Lightning Network today. There's a great company in the space called Strike that's globalizing this. They recently implemented in El Salvador. So I think that's the pathway that Bitcoin will go.
Does it have, so I know part of the problem with Ethereum is the gas fees. Does it have cheaper gas fees? Is it even called gas fees on the Lightning Network? These are all words I don't know.
Yeah, it's not called gas fees. The transaction fees are like near zero on the Lightning Network. Very small, very minuscule. And it gives you, again, how we talked about the warehouse function where we abstracted gold into paper, and that worked as long as you could redeem the paper for gold. Lightning Network is sort of similar, but you always have the option to redeem. No one can suspend your option to redeem it for Bitcoin. So it's this layer that is almost like a hyper liquid layer that lets you move Bitcoin very fast, very cheap. You can basically settle anywhere in the world with finality instantly. And then, when you're done, you just redeem for Bitcoin. So you're funding a channel, a Lightning channel to transact, and then you're redeeming that channel back into Bitcoin to settle.
So what happens if a bunch of these people who hold a bunch of Bitcoin end up switching it back into fiat, wanting to buy things?
This is the market process of Bitcoin. So if people that hold Bitcoin want fiat, they can sell. They could trade Bitcoin for fiat. People do this every day. Bitcoin's got, I think its daily volume is around $8 to $10 billion a day. I mean, it's very liquid. It's global. It's $1 trillion asset. And again, the other option is people can borrow against it. The lending market in Bitcoin is becoming quite mature, where because Bitcoin is this 24/7 asset, it's a bearer asset. So when I send it to you, it's as if I sent you a gold coin. It's unencumbered. Just by possessing it, that means you own it, essentially. You don't need to do a title search or anything like that on Bitcoin. So it's kind of the ultimate or pristine collateral in a way that you can just send this digital bearer asset to a lender, and they'll, say you send them $100,000 in Bitcoin, they'll loan you $50,000 or $30,000, depending on your loan to value ratio. And that's another way to get liquidity. And a lot of people opt for that, so you don't you can maintain your Bitcoin holdings without having to sell it, but still get liquidity in fiat for spending.
That's interesting. I didn't know you could do that. What do you have to pay for that?
I mean, there's different companies that have different rates. There's a big company in the US called NYDIG that does a lot of this for institutions, high net worth individuals. You'd have to check with them on their rates. I would just ballpark it around 8 to 12% a year.
Okay. Wow. I have no idea what to think. I have no idea what to think. What do you think is going to happen with inflation, given how rapidly you said 40% of everything was printed in the last 18 months?
Every dollar in existence, 4 out of 10.
Every dollar in existence. Is that just in America? That's in existence?
That's in existence. Yeah. So
what? Who's doing this? Is that just Americans?
Well, this is the Federal Reserve. This is quantitative easing. Every time you hear quantitative easing, the debt ceiling, printing money, all of these euphemisms just mean they're expanding the money supply. And when they're expanding the money supply, you can translate this in your mind to they're stealing property from people, or they're stealing time from people. And this isn't even an opinion, frankly. You can look at it mechanically, and I don't think there's any other way to evaluate it. So a couple of ways to think about this. One would be, again, money is just pure marketability, right? It doesn't have any value except what it can be traded for. So if there's one group of people that can print money that everyone else is forced to use, they're able to confiscate property and value from those people that are being forced to use it. And that's what inflation is, right? Essentially. So it's been wrapped in all these different academic jargons, like it's useful and necessary for a healthy economy, but it's just not true. Another way to think about.
Why did that come around? Sorry to interrupt. But how did people convince other people that inflation was necessary and a good thing?
Well, when you own the money printer, you tend to gain disproportionate leverage in academia. You could look at the entire emergence of Keynesian economics versus Austrian economics. And this is the big divide between central banking and Bitcoiners. Austrian economics was the cumulative knowledge of humanity in the sphere of economics throughout all of history, basically. And then when central banking emerged in earnest, this alternative branch of economics called Keynesian economics, largely under a guy named John Maynard Keynes, emerged as an alternative view of economic reality that really just justified monopolizing money, frankly. And if you look at, and this is all they teach in college, by the way. I have a master's degree in accounting and finance. They didn't teach me one letter of Austrian economics. Zero, zilch. But I learned plenty of Keynesian economics. And in Keynesian economics, you're taught that essentially the government is God. They're literally, it's the top of the page in the textbook. It issues money into circulation and takes money out of circulation. There's no consideration of the government as a human organization. They don't suffer any trade-offs. They have perfect knowledge. There's no politics. It's just this perfect institution.
Accurate representation of the government. Yeah.
Yes. And as we all know, that's completely ludicrous, frankly.
Yeah.
So that's how it emerged. I mean, I don't want to get into this argument. People are like, oh, no, that's not true. They didn't mean to do that. People always want to argue with me about the intentions. People think central bankers are really trying to do a good job. And I'm agnostic, actually, to their intentions, because it's it doesn't matter if you're trying to do a good job or not. The mechanical design of the central bank is they're running a pyramid scheme. Fiat currency is a pyramid scheme. So it's those with access to the newly printed money first get rich at the expense of those who get it latest and last. So if you just look at the operating mechanics of fiat currency, it's a really bad deal for everyone unless you have access to that new liquidity first. So how did we get here? I think just unchecked human greed. It's one of the ways I like to describe the free market is it's the collective expression of the logos, actually. So whenever we're buying and selling, we're effectively voting. So when you buy a car, you're telling the market to make more cars. You sell a house, you're telling the market to make less houses. When you corrupt the medium through which those preferences are expressed, the buying and selling, which is money, then you are distorting the economic democracy of the free market. And all of a sudden, if the Fed is printing money and buying the shares of this company, that's not because the company was demanded by market actors. It's not like it was doing something useful and people wanted that, more shares in that company to be bought. It's because bureaucrats decided in a backroom deal that they're going to print money and go buy shares of this company, whether or not it's producing any economic benefit. So you move
Renewable
away.
energy companies.
Yeah, exactly. So it's distorting the collective logos. And this is like a key point where I think we today think that state democracy is like the ultimate form of governance. But I would argue that the free market perfects what state democracy approximates. We think one person, one vote is the right degree of fairness, but that gets distorted in all these different ways. The real, true, pure democracy is the free market itself with honest, undistorted money. But, thanks to man's greedy ways and very inventive machinations, he found a way to basically get a perpetual free lunch by monopolizing money. And this is, again, what every government throughout history has done. It's always like control the money to control the people. So that's where we're at.
And you don't think there's any way that the government's going to be able to regulate Bitcoin? Like, what about if you're trying to, I can't remember where I was, where you could potentially buy property with Bitcoin. I'm sure that's popping up in areas. And then isn't that going to have to be taxed in some way in order for governments to allow Bitcoin to exist? And hasn't China tried to ban it a bunch of times?
Yeah, China's banned Bitcoin multiple times. I guess the key point is this, that regulation on Bitcoin is ultimately ineffective. You're not going to be able to change any of the rules of Bitcoin by passing a rule in the jurisdictional world. So what they can regulate are the endpoints. So, if you're trading it for real estate or anything to buy shares in a company, the governments are very good at regulating centralized entities, institutions, physical land, but they're very poor at dealing with decentralized institutions or entities, which that's basically what Bitcoin is, a decentralized business. So I actually look at it the opposite way, that I think in the same way gold was a regulator of government historically, and that's largely why governments had to devise such an intelligent way to co-opt gold, because gold was holding them accountable, right? They couldn't be irresponsible with money because gold would leave their country, and this forced them to get very creative in how they control the market for gold. I think Bitcoin will provide a similar function in that it will actually be a regulator of government. So if you're overly tyrannizing your people, or you're overly inflating or whatever, people are just going to move their wealth into Bitcoin and leave to the country where they're treated best. So the point here again is like, the more dollars you print, the more inflation you create. Inflation is just a tax. They're just stealing wealth from you, full stop. There's nothing else to it. People, market actors, are voluntarily going to figure out, okay, you're taxing me, you're stealing from me. I want to put my money somewhere that can't be inflated or taxed as easily, which is Bitcoin. And then they have this whole world of options open up to them, which is you have this hypermobile, globally liquid capital that you can go anywhere in the world. So I think Bitcoin causes government to shrink over time dramatically.
Do you think that's only possible for people who are smarter though? Because like Bitcoin's kind of difficult to figure out if you have no idea what it is even. It's a completely different concept. It's been difficult for me to wrap my head around it, but I think I've wrapped my head around it. And then getting up and moving to a different country, that requires a type of person, a super open individual. Then you have to have some money in order to do that. So aren't we talking about the tiniest percentage of the population? Or do you think that's just going to grow?
In the beginning, yes. And I think that's what you're seeing today. There's a small minority of people that tend to be disagreeable, libertarian minded, independent thinking, curious. Yeah, there's a number of other traits I'm sure we could put there, but
Open.
that have gone into Bitcoin. Yeah, open. That have gone into Bitcoin first. But over time, I don't think, here's the one constant, I guess you could say, in statism is they're not going to stop printing money. They have to keep printing more money to actually service prior debts that they've accumulated. So, Social Security, Medicare, all these things, there's tons of unfunded liabilities, and they have to print money to service those. So the more dollars they print, the more demand they create for unprintable money, which is Bitcoin. So I think people get forced into this over time. And then you're talking about disrupting the revenue model for states. Direct taxation and inflation are kind of the two revenue models. Inflation effectively goes away in a Bitcoin world. And then taxation becomes much more difficult to impose because the citizen has a lot of negotiating leverage. If you want to, just send me a bill and tell me what my tax rate is, well, maybe I leave your country. And maybe I decide I don't want to participate in your regime anymore. It's pulling governments into more of a free market competition over citizens, actually. And so when governments compete, citizens win. We'll get lower prices, better services, more innovation, all these things the free market provides that the government has restricted itself from through the monopolization of money.
Where are you located, if you don't mind me asking?
I'm in Hawaii currently.
Okay, so you're still in the US then. You haven't hopped down to like Puerto Rico or something.
I hopped out for a bit, but I'm back. I feel good kind of in the place I'm in Hawaii now. I've got 1 foot out and 1 foot in, it feels like.
That's fair. I just moved out of Canada. So you bringing up the government taking all of my money and yeah, I feel that.
You moved to Nashville, right?
Yes.
I'm from Tennessee originally. So Nashville, it's an amazing city.
It's wonderful. I love it. It's full of allergens, but it's better than being full of. I'll probably just end that sentence there instead of being too. But I like it. It's fun. Do I have other questions for you? I don't know what to think about this whole thing. I think probably just having money in other things that aren't the US dollar at the moment is a good idea. How do you feel about other cryptocurrencies like Ethereum or any of the other tokens or coins that are around?
Yeah, I don't think there's a market proven use case for anything in the crypto universe except Bitcoin. I'm not saying that there can't be at some point. My general advice is that Bitcoin is money. It is the internet of money or the digital gold. There's all these analogies that partially describe it. Everything else I describe as liquid venture capital. So
yeah, okay.
Could be something, but there's probably, 99% will fail.
Okay. That makes sense. Where can people find you online if they'd like to find you online, learn more about Bitcoin, what you do?
Yeah, so I'm on Twitter at Breedlove22, which is my last name, BREEDLOVE22. You can also find me, there's links to everything there, but the show is called The What Is Money Show. And we're at whatismoneyshowpodcast.com, I think, or you can find us on YouTube.
Okay. I'll link all those below. Thank you very much for coming on. That was fun.
Thanks, Mikhaila. Thanks for having me.